Good morning, dear investor. Today the market is on freeze. Okay, I got so many calls today. So I want to share with you something very very important. First of all, okay, please don't panic. If you're invested in mutual funds, the fund manager will take care of your money. Not to worry about that. Number two, if you're holding stocks, if it is quality stocks, you don't need to worry. It will finally bounce back. Now I want to tell you one more thing, and before I go to the main point, okay, I'll tell you the main point. Okay, we are very very close to a bottom. A maximum, now it's around 8,600, 7,000 to 7,500 will be a very very strong support. I will tell you what it is. Okay, I'll tell you what towards the end. Let me so this is not the time to panic. Okay, this is time to load your guns. Okay. Now in 2008, market tanked. If you ask everybody, they'll say because of US meltdown. US meltdown, yes, that could be only 5%. In 2008, our GDP was at 10%. Inflation was at 10%. Oil was at $149. Okay, the fourth important factor, which we use very mean reversion. During January 2007 to January 2008, there's a fund called Reliance Diversified Power Sector Fund. That fund gave 145%. 145%. So whenever, as per our strategy, like in the sense, we are not applying a mind, we use the mean reversion strategy. So the market tanked. Not only because of that, now Reddy Garu, means Mr. Y.V. Reddy, the RBI governor, he hiked rates twice. When rate hike happens, there's a quote, that's what is, this is Peter Lynch's famous quote is this, 2 steps on a tumble, which means whenever there's a 2 rate hikes, the market will come down. Why? Because when the growth is very fast and very high, too much money chasing too few goods, they would like to slow down the growth. So what happens when they do a rate hike? Money moves from bank to RBI. So they have to lend at a lesser value, lesser amount. They can't lend the same amount what they lent in December or January. So what will they do? They hike the interest lending rate. So the borrowers also will come down. So market tanked. In 2008 we tanked. We went from 6,300 to 2,262. 2,262 when it reached, it had a swift 800 point move, and I think it closed above 3,000 rupees that day. That was the bottom. And we fell because of what? Global meltdown in 2008. So if global meltdown, there was no global recovery till 2013. I don't think US recovered till even 2011-12. But we recovered from 2,262 to 6,300 again in 2010, October. Okay. So finally markets boiled down to valuation and liquidity. See now the valuation, okay, I'll come to the valuation part. So let's not worry about today, the situation is completely different. Now if you know, we exited in 2018 and the market fell till 9,500. It fell till 9,500. The same fall should happen the whole year. What happened today now should have happened in 2018 itself. But I don't want to get into the details because of some interested people have kept the markets up. Okay, and because that is very visible, because new small cap index moved from 9,600 to 5,100 in 15 months. But when small cap index hit a low of 5,100, Nifty hit a high of 12,000 odd. So this, it's not an aberration or whatever it is, this has to be adjusted. That is what is happening now. Okay, so entire that period, only 10 stocks were inflated. They inflated the 10 stocks and kept the Nifty up. It is basically having a 12-inch bicep, and the rest of this is like very thin. So now that is getting to normalcy. Okay, so another important point is Nifty P is 25 for the last 18 months, 18 to 20 months. I've never seen like that before. About 25, it always comes down. Yesterday, the P is 21. Okay, I think today it will go below 18. Below 18, it's a cheap market. Finally, markets boil down to valuation and liquidity. Now below 18 PE is a very strong buy. PE above 25 is expensive. And if you can correlate that with the mean reversion, that is a small cap index doing 100% in 1 year, then that is the time to exit. Okay, that is the exit strategy we use. So now is not the time to panic. Now you please, so time to load up cash. I'll tell you why that number. Okay, I don't want to get into the exact number because see I'll tell you what. The market moved from 10,647 to 12,430. Okay, if you do a Fibonacci retracement, Fibonacci is law of nature. What is Fibonacci? Please Google and find out. It's very difficult for me to explain. I'm difficult for me to articulate. Fibonacci series numbers you will know: 1, 2, 3, 3 plus 2, 5, 5 plus 3, 8, 8 plus 5, 13, 13 plus 8, 21. Like that it goes. So Fibonacci is law of nature. For example, anything to be logical or look what you call receptive to mind, or what it has to have certain parameters. For example, like a person, if he's standing, he has to be, this is to be, there is a percentage 1 is to 1.6. Okay, from the hip it has to be 1.6, 1 is to 1.6, then the ratio is perfect. so I don't want to get into that much more. So when you do a Fibonacci price retracement from 12,430 to 10,647, retracement means coming down. Okay, it comes around 7,000 to 7,500 levels. Okay, I've seen this only a couple of days back. I checked, and because last time, if it had broken last time, it took support 9,500 in 2018. If it had not taken support there, the similar fall would happen in 2018 itself. It's happening after a long time. It's happening after almost 18 months. So I'm happy it happened now. If it had happened at that point in time, we will be sitting very high. But still, we entered a small cap index at around 5,400 levels, and 5,100 was low. So that index has already rallied. That means the big buyers are already there in that index. So when the market comes up, it will be very, very swift. Very, very swift and be very fast. Okay, that's what I think. That's what I'm seeing, because the way it has gone down. So I think the bottom is in place very soon. It will be anywhere between 7,000. It is between 7,100 to 7,500. That is the range it shows. So somewhere it will form a bottom there, which is always close to 15%. Okay, now see, this is a very ideal situation in the sense, like now we are at 8,600. We can see 12,430. At 12,000, what can we see? Nothing. Today at 8,600, you can see 12,430. Almost a 50%. Increase from 8,000. Okay, which is 4,000. If you add 4,000 to that, 35%, which is 12,400. So this is not the time to panic. Yes, there are a lot of slowdown has happened, but still there are companies which are doing very well. Okay, so not to panic. Stay. I think this is the time we have to pump in money. In the sense, for example, if you know, we generally do SIP. Now, if you have 10 lakhs in fixed deposit, 2.5 lakhs you can pump into mutual funds or stocks. Definitely you will be rewarded at this point in time. Okay, so not to worry, we are very close to the bottom. We are going to wait and see, and I think it's going to be swift, down, swift, fast, upside, and so relax, not to worry. I'll try and post another video during the day. Thank you. Have a nice day. Bye.